Good morning and welcome back to Morning Markets from True Potential, Paul Durrant, Investment Director. If we start by looking at global equities, yesterday they were lower. Here in the UK, the FTSE 100 was down. We have to remember though, the UK and the FTSE 100 has been a strong outperformer year to date, up 3.2%, but they were lower yesterday, and that was led by oil and energy stocks after the oil price continued to grind lower, now below $100 a barrel, and that's on the back of the potential threat for the European Union to ban Russian oil, but also the fact that we're still seeing lockdowns due to COVID within China, so that's curtailing some demand there. European equities were also weaker by a similar amount. We saw some weakness in technology stocks that are sensitive to higher bond yields, which we saw yesterday. And in the US, we saw a similar weakness led by technology, healthcare and energy. Yesterday, we heard from George Bell, who discussed UK GDP data. We've got more data out this morning on the UK. This time it's on the labour market. Really important because it gives another good indication of the strength of the UK economy. So if we dig into the details, what did we see? We saw unemployment fall from 3.9% to 3.8%. This is now back at its lowest level since 2019. We also saw the number of people being added to the payrolls to hit 35,000 added, and that meant that it hit a record of 39.8 million people in terms of payroll numbers. Another record was job vacancies. The demand for workers is still at a record high that continued to push higher at 1.3 million job vacancies out there. It shows the tightness in the labour market today. With that, we had wage growth numbers. People are starting to earn more because the demand for workers is so high. So wages, including bonuses, went from 4.8% to 5.4%. That's a year-on-year figure. If we exclude bonuses, we saw the figure go from 3.8% to 4%. So what can we take from this? Well, clearly the data shows us that the UK labour market is still very strong and continues to show a good recovery after the COVID environment that we've been through. People are earning more, which is good because they can consume more, and it's especially important because we've got broad-based high levels of inflation. We've also just gone through an increase in national insurance contributions, so people can help offset that because they're starting to earn more and can continue consumption, which is good for the UK economy. This is also pleasing for policymakers, and it allows or increases the expectation that the Bank of England will increase interest rates again in May. And what I'll be watching out for today, well, it'll be all about inflation. US inflation is out, 8.4% is expected. So tune in tomorrow to find out more.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.